Has the mortgage maze got you feeling overwhelmed? Don't worry, you're not alone. Finding the perfect home loan can feel like searching for a needle in a haystack. But here's the burning question. Should you go straight to the bank or enlist the help of a mortgage broker? Welcome to Dollars and Dreams, the podcast designed to empower you to take control of your personal and business finance. You know, the very thought of money and finance can often send chills down your spine and stir up fear of the unknown. But let's change that narrative together. Through this podcast, my goal is to not only to provide you with useful information, but also to inspire and motivate you to take action towards your own financial goals. Let's rewrite your money story together. Hello and welcome to Dollars and Dreams, and happy Thursday. In today's episode, I'm going to talk about something that we hear quite often, both through the jenrichardson.co website and also through our financial services practice here at 123 Financial Group. And that is, Jen, my loan's only quite simple. Should I just go straight to a lender or should I use a mortgage broker? So in today's episode, I'm going to talk about the pros and cons of both of those. So that's a mortgage broker or using just straight to your lender or your bank. And of course, I'm going to bust some of the myths that you will hear, particularly in the media. And of course, you'll hear people talking at luncheons or, the water cooler type discussions that happen. So let's firstly talk about what a mortgage broker is. Now, a mortgage broker, as you probably know, is somebody who can arrange the finance for your loan, the refinance of your loan, or your commercial loan that you need. And of course, a mortgage broker's skill is knowing that there is different scenarios for different lenders. So some lenders are better with self-employed people. Other lenders are better with what we call pay-as-you-go, so that's salary and wage type employees. And other lenders might be better with commercial products. So knowing where to go to start looking for the best loans is obviously one of the skills of a mortgage broker. A mortgage broker will know each lender's products inside and out. If there's something that they're concerned with, they've got what we call a BDM, so that's a business development manager. So that's a person inside that lender that you can run scenarios through. You can ask lots of questions. Does this meet something that you want to do? And it's having that higher level of knowledge than you if you're just going to pick a loan off the market. And of course, there are hundreds and hundreds and hundreds of loan products out in the market. Each lender has quite a number of loan products. So how do you know which one is best for you? And of course, a mortgage broker's skill is determining what you need, even if sometimes you don't actually know what you need. And we have that question all the time of, should I just go with redraw or should I get an offset? Now, as an accountant, I know that an offset can be a great place to put excess money in case the house that you're buying isn't your forever house and you may want to turn that into a rental property. And there's reasons that an offset is very different to a redraw as far as tax goes. So if you're thinking of getting a loan and you think you might turn that into a rental property at some stage, you really do need to get the right advice so that it doesn't burn you somewhere down the track when you want to get another loan and use the excess money that you've saved up in your first home loan. The other thing that a mortgage broker is very good at is determining the hidden costs, and they can explain all those costs to you because, of course, when you take out a loan, there are some costs involved in the initial setup. There's also costs when you finalise your loan, and there's what we call ongoing costs for some lenders and some products. And of course, when you see an interest rate, that doesn't necessarily mean that's the total cost to you for borrowing that money. There are other costs, so your monthly service fees, and as I said, the fees in starting the loan and ending the loan. So that's where a comparison interest rate comes in. And of course, we have what we call honeymoon rates, and we've seen those particularly over the last few years, where a lender will offer you a really good, what we call introductory rate for your loan, but after 6 months or so, it turns into a normal variable rate interest. And of course, the lenders rely on us being lazy, and we look at that first up loan and we work out what our interest rate is and think it's a great loan, with the thought that we'll refinance when the honeymoon period is over, but most of us don't. So what happens with a mortgage broker is they will follow you up and say, your honeymoon rate's coming to an end. Do you want us to have a look at refinancing you somewhere else, or doing what we call repricing? Now, repricing is where you go back to your lender and ask them to relook at your interest rate. So that's a skill that a mortgage broker has. And of course, we all know when we plan on doing it, we don't always do things as we need to do them. So a mortgage broker, of course, has that on their list of jobs to do as part of their regular week. So, of course, it is going to be dealt with in a more timely manner than you will. Mortgage brokers are obviously better at the negotiating power, so sometimes we can go back to our BDM and say, we can get a better interest rate of X with another lender. Can you match this for your customer so that we can stay with you? Otherwise, we will refinance. And so that negotiating skill and repricing is something that a lot of people find quite difficult and confronting. But with a mortgage broker, that is what they do. So the piece of legislation that protects you as a consumer over using a mortgage broker is something that isn't known a lot out in the real world, and it is something that is really important. So it's called best interest duty, or what we call BID in the industry. BID is, as I said, a legal requirement for mortgage brokers to act in the best interest of their clients. And that means that we have to prioritise your needs and your financial goals over our commissions or incentives. So remember I talked about earlier that mortgage brokers sometimes get a bad rap about being paid on commission, and you'll have heard that in the media. The reality is a mortgage broker is paid by commission, yes. The difference between one lender and another is fairly insignificant, so there is no financial incentive to put you with lender A as opposed to lender B. But BID legislation says that it's actually illegal to do it. And if you find out that your mortgage broker has done that, then you have a legal recourse for the additional interest that you may have paid or the additional cost to you that you may have paid. There are reasons that a mortgage broker have these, and this was legislated as part of the Royal Commission we heard a few years ago. And so it does add an extra layer to your comfort and protection that the advice you are getting from a mortgage broker is in your best interest and it aligns with the situation that you find yourself in. The advantage of BID when using a mortgage broker can't be found when you walk directly into a bank or a lender and get information and a loan from them. So when you go directly to a bank yourself, there is no such legislation as BID that covers lenders inside a bank. And so they don't even have to tell you if the loan that they're giving you is the best of their loans, let alone if there is a better loan for you down the next lender in the street. So it is important to understand that a mortgage broker gives you that protection, that they have found you the best loan for your circumstances. It is important to remember that the interest rate is not always in your best interest, because you may be able to get a no-frills loan at a much cheaper interest rate, but that interest or that loan product may not give you what you want. So, for example, if you wanted an offset account, you may pay slightly more in interest. But if your intention is to turn your home in the next 4 or 5 years into a rental property and then get a better or a bigger house or whatever it is, might be a closer to the beach type house, the offset account allows you to put any additional payments into that loan without it actually being applied to the loan. So therefore, you can use that money for a deposit on your next house and still keep your current loan on what is now your current home, which will become your investment home, 100% tax deductible. If you use redraw and pull the money out of that loan to buy your second home, then the interest on that first loan won't be fully tax deductible. And I know that was a pretty difficult concept to get. So if you need more information on that, reach out to me at jenrichardson.co and I can put one of my mortgage brokers in touch with you so that you can get the loan that suits you best. So it is important to remember that you are protected when you use a mortgage broker. Over the last few years, mortgage brokers now write loans to 74% of all the loans written in Australia. So just explaining what that means is for every single loan, so let's say there's 100 loans in Australia, 74% of those loans at the moment would be written or done through a mortgage broker. So 26% are done in branch with a lender. The other statistic that we probably need to know is that complaints to AFCA, which is the government body which looks after lending products, complaints to AFCA are only 6% from mortgage brokers. So mortgage brokers are writing 74% of the loans and only 6% of the complaints are against them. So that means that mortgage brokers must be doing a good job. Of course, mortgage brokers are paid by commission, and one of the myths, as I said, is that a mortgage broker will put your loan where they get the best commission. I just explained that BID doesn't allow that to happen, so that's the protection for you. But as I said, the commission that is paid from the lenders is fairly insignificant in the differences. So there is no incentive for a mortgage broker to put a loan with one lender or another, even if BID wasn't there. Given that only 26% of loans are written in the branches or with a lender, direct with a lender, but they contribute to 94% of the complaints. So that means that the BID legislation is working, and most people are really satisfied with the job that a lender does. So with the loans, as I said, there's hundreds and hundreds of loans. So a mortgage broker can go through and work out from those huge number of loans out there which ones are best for you. A mortgage broker will recommend the one that they think is the best, but they will also give you two other options if there are two other options that meet your conditions. And so knowing that, and they can give you the comparisons of what it looks like, how much interest you'll pay, what your total costs are, and compare it one to the other. As I said, they will look at things like your whether you want offset or redraw. Do you want fixed? Do you want variable? Do you want a split loan? How many offsets do you want? And these are all the things that a mortgage broker can do for you. A mortgage broker also sits with you and will go through what your personal goals are. Is it to pay a home loan off really quickly, in which case you might be better off to take loan C instead of loan D? They will ask what your plans are in the future. They'll go through your spending to make sure that you can afford the loan that you're getting, because it is important to remember that whilst we can cut back our expenses for a short period, most people can't cut their expenses for an extended period without making changes to their spending or putting budgets in place. A mortgage broker can help you do that. And of course, with your mortgage broker, they'll go through and do all the paperwork for you. They will submit the loan to your lender, track the progress of that processing of the loan, and deal with what we call the credit officer. So the credit officer is the one that will go through your application and determine if they will lend you the money with any conditions that you might need to satisfy or without any conditions. And so the mortgage broker will talk to the credit officer on your behalf if they've got questions, or if they want any further documentation. And it just alleviates you from the process so that you can get on with doing what you do in your everyday life. No doubt you need to be involved in getting the documentation for your mortgage broker, but mostly that can be done in an hour or two. So there's not a huge investment of your time. And particularly with interest rates being high now than they have been over the last few years, it is really important to look at your interest rate. If you've got to do a couple of hours work to save yourself a couple of $1,000s a year in interest, it's a pretty good rate for a couple of hours worth of work. So think about that when people tell you that more refinancing will take up a lot of your time. A mortgage broker can remove that for you. So if you go directly into a bank, you'll have to do some of the paperwork yourself. You'll have to get all the documents. You'll have to answer all the questions. You'll have to get other documents if you need them. So the advantage of the mortgage broker is they take over the heavy lifting for you so that you can get on with whatever it is you want to do. Mortgage brokers also mostly will be accessible outside business hours, whereas a lender in a bank, you need to fit in your appointments to their working conditions. Most of those will finish work at 4:30 or 5, and you have to find that time. Some lenders will have mobile credit officers, and they will sometimes come to your house, but most people now can handle the paperwork through electronic signature, through uploading documents. Most mortgage brokers have a portal. You just drag and drop your documents into that portal. So it is nice and easy. Gone are the days where you need to walk in and sit in a mortgage broker's office. We have clients that we have all over Australia because we do it through Zoom meetings. As I said, we've got a portal. You can upload your documents. There's links that will get the information that we need from the banks. And everything can be done electronically. So it can be done at night when you get time. It can be done outside of business hours, and it can be done without you having to take time off work. The other thing that we hear quite often, some of the myths, is that it costs more for your loan because the bank have to pay the mortgage broker a commission. And that is just not the case. So let's debunk that one here. The cost is not to you to pay the commission. The cost is to the bank. And some people will say, well, that's adding to the cost of financing. So if all the mortgage brokers left, we wouldn't have as much going out of the bank in the way of payments. So therefore, mortgages will become cheaper. And again, I'm going to debunk that, because if you go straight to a lender, let's say we have no mortgage brokers, so the banks aren't paying commissions anymore. So you have to go back to your lenders. The lender still has wages. They still have superannuation. They still have insurances for that employee. There's bonuses. There's rent of office space. So a lot of the lenders now are closing some of their branches. They would have to open more branches because people can't travel, so far to see a lender inside a bank. So the cost that the bank is paying by paying to a mortgage broker is roughly the same as what they would pay for your loan if they had an employee in their branch paying for it. The other thing with a mortgage broker, which doesn't happen with an employee inside a lender, is that if you don't hold your loan for a certain period, and for most lenders that's 18 months, let's say you get divorced, you have to sell the house, because you've got to get the money to go either way, the mortgage broker actually has to give back the commission if you don't hold your loan for 18 months. And so that's a cost that mortgage brokers have to cover in all of their income producing activities. Particularly when interest rates started to rise, we would see a lot more what we call clawback. So that's where the commission is paid back. And we would see that because, unfortunately, money and money issues is the greatest thing that breaks up marriages and relationships. So as soon as interest rates started to rise, the cost of living started to go up. More people were looking to sell their house to, start renting for a period of time because they couldn't afford their mortgages. People were breaking up because of money pressures inside their relationship. And so a lot of brokers got clawback because people didn't keep their loans for 18 months. And so that's a cost that a mortgage broker has that a person that's an employee inside the bank doesn't have. So that is a really big incentive for a mortgage broker to make sure that the loan suits you, that you can afford it, and all the other reasons that you might sell your house inside 18 months isn't forgotten about in the process. The other thing that we hear is that mortgage brokers only look after complex loans. And that's not the case. Mortgage brokers also look after what we call pay-as-you-go loans. So that's people that are on salary and wages. And just because you're on salary and wages and it's a nice, simple loan, doesn't mean that the mortgage broker doesn't work hard to find you the best loan. Now, there's a lot of lenders out there on the market that are only online. So it's really difficult for an everyday person that's not a mortgage broker to work out how to access a loan with them. Some lenders actually only even work through brokers. They won't work direct to the public. So you need to go through a mortgage broker sometimes to get a lender that might have a better rate. A mortgage broker, as I said, will always make sure that the loan that you're getting is what the product that you need or the loan that you need. A mortgage broker is there for the follow-up. So if they see that the interest rates are starting to rise, mortgage broker will get back in touch with you to see if you want to look to move your loan somewhere else. They'll even offer resources such as budgeting or tips on how to pay your loan down better. So the pros of using a mortgage broker is obviously you have access to a wider range of lenders and loan products. They're experts and they will give a personalised recommendation based on your own personal situation, not just a run-of-the-mill. A broker can handle all your paperwork and the negotiations, which will save you time and stress, of course, because nobody likes filling in paperwork, but also because they can take that time away from you so that you can have that extra time with your family, and also because they're doing it, 9 to 5 every day. So instead of you thinking, I'll wait till the weekend and then I'll try to find the paperwork and something comes up, so it's the weekend after, they will just get it done and get it done within a couple of days, mostly for you. They'll deal directly with the credit officers, so you don't have to. They will help, as I said, with budgeting, and they keep in touch with you to see if there's anything that you're concerned about, if you're having any issues, if you need any help with anything, and they're more accessible. Mostly a mortgage broker, you'll get their mobile phone, and mostly mortgage brokers will take your phone calls 7 days a week. Not always, because you've got to remember they've got family. But it is important that you find a mortgage broker that you feel comfortable with. And I say that, 99.9% of all mortgage brokers are excellent at what they do. But different personalities are attracted to different personalities of the consumer. So it is important that you find somebody you're comfortable with. Some people like a very open, casual dialogue and very calm. Other people like very factual, here's what needs to be done step by step by step. So when you're talking to your mortgage broker, get a feel for how they operate, how they talk to you, because if they can't communicate well with you, they're not the mortgage broker for you. So it's important to do your research, talk to your mortgage broker before you decide to go with them. Don't be afraid to talk to a couple of brokers. Talk to your friends and family to see who they've used. Reach out to people like me that can give you access to mortgage brokers. And if we're not the right fit for you, I've got a network of other mortgage brokers that I know that may be a right fit. Most mortgage brokers will have some financial literacy skills. There are certain mortgage brokers that are far better with commercial loans, certain mortgage brokers that are far better with first home buyers, and other ones that are better with more complex loans. So one of our life skills here is, because we're an accounting firm, we're a financial planning firm and a mortgage broking firm, if my mortgage broker has questions about tax, she'll go and talk to one of our accountants. Or if she has questions around, the financial planning aspect of getting a loan, she'll talk to one of my financial advisors. So there's a really big network of experts that my mortgage brokers can have access to. So it is really important that you look for a mortgage broker. If you've got a complex loan that you're after, you look for a mortgage broker that's got access to financial planners and accountants as part of their mortgage broking. It is illegal for anybody other than a tax agent to give you tax advice. So a mortgage broker that doesn't have somebody there that helps you with the tax can't tell you legally what is best for you tax-wise. Whereas when you come to a firm like we have here at 123 Financial Group, and also through the jenrichardson.co website, you will be able to access all of that expertise that you need. So what are some of the pros of going straight into a lender? Well, if you already know that you want to use Bank A and you're not interested in looking at any other option, even if it's cheaper, you might as well go straight to them. A loan inside a branch, once you've made the appointment, can often be quicker than if you go through a mortgage broker, because there's a lot more checks and balances that go through with mortgage broking than there is with a lender inside a bank. Because if they've got certain tick boxes they meet, then the actual loan officer can process, and it doesn't need to go through to the credit advisors and the credit assessment team. So if it is, I want to use Bank A, I'm not even interested if all the other loans are cheaper, I just want to use that bank, then potentially you probably should go into a bank and get it processed quicker. As I said, it can be a lot more straightforward because they're not caught by bid, so we don't have to do all the paperwork to show that we've offered you the best loan and do all the research. Banks can be a little bit more attentive, so if you want an appointment, you might be able to get in that day, and that's because they now only write 26% of the loans in Australia. So they may have more time available. They're probably not racing to a next appointment. So, they might only do 3 or 4 loan appointments in a day. So sometimes they can be a little bit more accessible if it is a nice simple one, and as long as you know that they've got a good interest rate, that's fine. A lender might also be less likely to pick up if you don't have what we call a good credit activity. And so that is where you may have had, they look at your bank statements, and every lender is different, but it can be anywhere from 1 month to 6 months. Some lenders, it might even be 12 months. So they'll look at your account transactions and things. So if you've got a lot of, say, gambling withdrawals, so at Star City or whatever, any casinos, they can see regular withdrawals there. That's a red flag to a lender. If you've had late payment fees on any of your bills, like your telephone bills, council, water, any of those, that's also a red flag. If there's declined transactions, that can also be a red flag. So if your loan is only simple and it's going to be the type of loan that can be approved by the actual credit officer in the bank, then you might be better off to go there, because they won't go through digging. They'll just look at their own account transactions and any loan repayments. So if you don't have the greatest credit activity, maybe go straight into a lender, but keep in mind it will need to be quite a simple loan. So, good LVR, which is the loan to the value of the property. So if you're buying $1 million property and only borrowing $500,000, they'll do a lot less checks and balance, because effectively the bank own 50% of your house till you pay the rest off, and they would be able to recover their money. If you only have simple choices of what you want, so if you're very drilled down on what you want to get from your loan, then you may be better off to go to the bank. The other thing, you'll hear a lot of interest around the first home buyer grants that are out there. There are only certain lenders that offer those. That doesn't mean you've got to go into a lender. A mortgage broker can work out which lender has those and which one is better. So don't think that just because you're a first home buyer and you're accessing the first home buyer schemes that you have to go straight to a bank. The cons of a bank, of course, are that they can only offer their own products and their own interest rates. So if you walk into Bank A, they may not have the best interest rate. Bank B may have those. The lender at Bank A can't match that. You can, of course, try to convince them to reduce their interest rate to match that other lender. Rarely does that happen when you first take out a loan. That might be when you're looking to do what we call repricing. If you go straight into a bank, you generally won't get as much personalised service, as in they don't talk about your big holistic approach of, where do you see yourself? What's this loan going to do? Is it just to pay it off quickly to get your next loan? Is it part of your downsizing? So maybe you're buying it to rent, but that's where you're going to move when you retire. A mortgage broker will do all of that. And as I said, that may mean that you don't get the greatest loan, but it gives you a better outcome. Don't ever confuse loan rate with the only option you have, and that you always need to judge a loan by its interest rate. It is a really big point, of course, but sometimes it's just getting the loan to start off with, and then you might look to refinance. And so if you can only get a certain loan product which isn't the greatest interest rate because you're borrowing a lot or your income's down because of, whatever reason, a mortgage broker will then put that in there that we just need to get to a certain percent of your loan gone. You might be just about to finish uni and you're going to get a better rate, or you're about to get a promotion at work so you'll get a better income. A mortgage broker will flag that on your file to come back to you and then look to either reprice, refinance, or move you to another lender. So there are pros and cons, definitely from my point of view, keeping in mind I am a mortgage broker. I am very much a believer that a mortgage broker is invaluable at what they do. They look at the big picture, they look at your finance goals and everything, whereas a lender may not. You might get a really good lender, but you get whatever lender that bank uses. With a mortgage broker, you can talk to a couple of people. If they're not your fit, you can go to another one. You don't get that choice when you walk into a branch. You get the lending manager that you get. So if you are wondering about home loans, whether you should go to a mortgage broker or go to direct to a lender, I really hope that has helped you. There are pros and cons with everything. The media's had a big beat up that mortgage brokers are making a ridiculous amount of money because your loans are paying these huge commissions, and that's adding to the cost of finance. I hope that this episode of my podcast has helped you understand how the mortgage broking industry works and how it can work for you as a home buyer. So reach out to me here at jenrichardson.co if you need help with a mortgage broker, if you're not quite sure whether you should refinance your loan or reprice your loan, because refinancing a loan can be costly as well, because you extend sometimes the period of time that you're paying your loan off. So if you need any help, reach out to us here, comment below. If you need me to put you in touch with one of my mortgage brokers, and we can help you see whether you can put yourself into a better financial position. So that's it for today. Don't forget to like and subscribe wherever you're watching or listening to this podcast so that you get notified of the next episode when it drops. And if you have any friends or family that need financial help or guidance, please send them my way. So either to listen to our Dollars and Dreams podcast or reach out to us here at jenrichardson.co. If it's something that needs to be dealt with by my financial services business at 123 Financial Group, I can send the referral across there. I obviously work in that business on a day-to-day basis, so I will be the one helping you over there as well. So that's it for today. Thank you and happy Thursday. I hope you enjoy your week. Don't forget my podcasts now drop every Tuesday for business-related financial help and Thursdays for personal financial help. That's it. Thank you and enjoy your week. Remember, the advice shared in Dollars and Dreams is general in nature and it does not consider your own personal circumstances. Dollars and Dreams is for educational purposes only and should not be relied upon to make investment or financial decisions. If you need more help, please reach out to a financial advisor for tailored personal advice. Don't forget to click that subscribe button so you don't miss out on future content. And please leave me a review. Your feedback really helps me to reach other people chasing their money dreams. You can find me over on Facebook and Instagram to connect with me. You will find the link in the bio or head over to my website at jenrichardson.co where you will find free content and learning tools.